Welcome to The Explainer. Every so often a story comes along that just completely changes the game. Today, we're talking about one of those. It's about India's financial revolution, how an entire country is totally rewiring its economy and bringing hundreds of millions of people into the modern banking world. And they're doing it at a speed and scale that is, frankly, mind-boggling.
So let's just start with a number. 89.3%. What is that? Well, that is the compound annual growth rate of just one payment system's transaction volume in India, and that's over just 5 years. We're not talking about simple growth here. This is an absolute explosion.
So that really brings us to the core question we're tackling today. How on earth did one country manage to change the way hundreds of millions of people handle their money and do it almost overnight? I'll tell you this, it wasn't just luck. It's a fascinating story that weaves together some brilliant technology, some really bold government moves, and a population that was just ready to jump headfirst into a digital future.
All right, so to really get our heads around this revolution, we've got to start with the sheer scale of the change. The move away from physical cash.
For generations, India's economy just ran on cash. Piles of it, and paper. But that's all changing, and at lightning speed. Digital payments have just taken over so completely that the old ways, writing a check, they're basically becoming museum pieces. And this wasn't just a simple software update. This was like ripping out the old railroad tracks and building a brand new high-speed rail system.
Okay, so what was the engine behind that ridiculous 89.3% growth we talked about? It all comes down to 3 little letters, an acronym that literally changed everything.
It's called UPI, which stands for Unified Payments Interface. Now, the easiest way to think about it is, imagine a universal remote for all of your bank accounts, all living inside one app on your phone. And because it's an open, public system, anybody can build payment apps using it. It's a really great analogy, actually. UPI basically democratized payments the same way the internet democratized information. It made sending money instant, simple, and free for regular folks like you and me.
And the speed at which people started using it is just, it's staggering. Get this. In 2018, UPI processed about 3.75 billion transactions. Okay? Fast forward just 6 years to 2024, and that number has exploded to over 170 billion. That is a 45 times increase. It's just wild.
So what was the result of all that? Well, UPI didn't just, enter the digital payment scene, it became the scene. By 2024, it was handling a mind-blowing 83% of all digital transaction volume in the entire country. We're talking about almost complete and total dominance.
But look, this story is about so much more than just being able to easily pay for your coffee. All this technology, it laid the foundation for something way more profound. It was about bringing an entire nation, 1 billion plus people, into the formal financial system. It's about what we call financial inclusion. 520.08 crore rupees. Now, what does that number mean? It means 520 million people. That's how many new bank accounts were opened thanks to just one government program. To put that into perspective for you, that is more than the entire population of the United States and Canada combined. Just incredible.
And this is where that digital revolution really hits the ground, especially in rural India. 100%. That's the percentage of new bank accounts in rural and semi-urban areas that are now opened digitally. The system was built to reach every single corner of the country without needing a single new brick-and-mortar bank branch.
So how did this happen? It was driven by this massive government plan called the Pradhan Mantri Jan Dhan Yojana, or PMJDY for short. The whole idea was to make it radically easy to get a bank account. They made it universal so anyone could get one, and maybe most importantly, you didn't need to keep a minimum balance. This was a game changer. It created a direct pipeline for government payments to go right to the people, and it gave millions a way out from under the thumb of those high-interest local moneylenders.
Now, a change this huge doesn't happen in a vacuum, right? It was backed up by a whole wave of new thinking, new strategies, and smarter policies that swept across the entire banking world. The banks themselves had to adapt, and they did it with a really clever multi-step strategy. First, they leaned hard into technology. Then, once they had these new digital relationships with millions of customers, they started cross-selling other products, things like insurance or small loans. This unlocked this huge untapped demand that was just sitting there, which in turn fueled even more growth and expansion. And to handle all this new scale efficiently, we saw banks start to merge and even privatize. It was this perfect self-reinforcing cycle of growth.
And the policies got smarter too. A great example is the Know Your Customer process, KYC. We've all been through it. Instead of the old, clunky, one-size-fits-all approach that treated everyone the same, regulators shifted to a much smarter, risk-based strategy. It made it way easier and faster for regular folks to get signed up, while still letting security focus on the areas that actually needed more attention. And the innovation just keeps coming. India is now exploring the next big thing, a central bank digital currency, or CBDC. So what is that? Basically, it's a fully digital version of the rupee issued directly by the central bank itself. Right now, they're running a pilot program focused on the wholesale market. The goal is to make those huge transactions, like settling government bonds, a lot cheaper and way more efficient.
Okay, so they've built this incredible digital foundation. The rails are in place. So what's next? Well, from everything we can see, the future looks like more explosive growth.
Just look at bank lending. It's a huge indicator of how healthy an economy is, and it tells us a lot about what's coming. After years of steady growth, bank credit is projected to just take off, hitting over $2.2 trillion by 2026. That's the kind of money that shows a ton of confidence, and it's what really fuels major economic expansion.
And all that growth, it's like rocket fuel for the fintech industry. By 2029, the whole sector is expected to be worth over $400 billion. That's almost 4 times what it is today, and it will pretty much cement India's spot as one of the top 3 fintech hubs on the entire planet.
So when you put it all together, you've got the demographics, the incredible technology, the forward-thinking policies. The long-term path becomes really clear. It's why market reports are projecting that India is on track to become the 3rd largest domestic banking sector in the world by the year 2050.
And that really brings us to our final thought here. By choosing to build this open, public, digital infrastructure first, India basically created a launch pad for innovation that's unlike anything else out there. They've leapfrogged entire generations of financial tech that other countries are still stuck with. So the real question, as we look ahead, isn't just about what's next for banking in India. It's about what the rest of the world is going to invent next, based on what it learns from this revolution.